Hey guys, welcome back to the channel. We've got a few topics to discuss on Bitcoin today. Short-term charts, obviously 15-minute ascending wedge formation. We need to look into that a little bit, but mainly what we're actually looking into today is the 2-day Gaussian channel that's discussed a lot on Megawell Crypto's channel, which you can go and check out. I'll leave a link in the description there for you. And then we're also going to be looking at what I like to call the horizontal bull market support, right? And what that is generally speaking in 2013, 2017, and 2021, over that year period of the bull market, there's generally a base level formed for support as a horizontal support line. 28.6k in the occasion of 2021 was that horizontal support level. We've got adequate data at this point, or it's getting there. Data to kind of give us an indication of when we will be breaking above that 28.6k level and what it will look like, as well as data to suggest when we will be breaking above the actual all-time high at 68k. So a lot of macro charts to look into, but firstly we need to get into a bit of short term. Before we get into anything though, go to the pinned comment, go to the description, check out the links. We've got the VIP group in there where we do altcoin trading signals. For last week has been extremely profitable. We've got the Crypto Academy where we teach people how to trade through a course format. We've got the Telegram group, which you can join for free and discuss with community members. And lastly, I'd love for you guys to hit the subscribe button and hit the like button. It really helps out the algorithm and it keeps you in line with my content. All right, so let's get into the video without further ado. I want to quickly show you guys the daily chart so you can get an idea of what the overall macro structure is for Bitcoin. Right, so this is the macro structure for Bitcoin right now. I shouldn't say macro. This is the medium-term structure for Bitcoin right now. The most important thing on this chart, without a doubt, is this downtrending line that's stemming from this June wick here through to the highs in August and then through to the highs in November. That is the most important line on the Bitcoin chart right now. Breaking that line will break the downwards trend we are seeing. Very important. If we break that line, we're breaking the downwards trend and we will be able to head upwards and do something like this and finally move to the upside. That is the important line. Surrounding that line is also the 200-day SMA. And also on top of that, surrounding that line is the bull market support band. So you can see really the crucial importance of that yellow line. Not only breaking that yellow line would break the yellow line, of course, but it also break the bull market support band, and it also get us in a position to break above a 200-day SMA. And both of those things, I don't need to show you the chart, you guys know this for a fact, both of those things are very, very, very strong historical indications that when we break them, we get out of the bear market territory. So that's very important. That's the daily chart. Look at that yellow line, chart it up, get it on your chart right now, put an alert attached to that line. When that thing breaks, we're in golden territory. Now, until that happens, we need to be focusing on more shorter term charts. And those shorter term charts are stemming into what I've got here. I'm zooming up so you can see it. We have 3 separate lines. Let's go to the 15-minute chart. These 3 yellow lines, and then we have a pink wedge. This is what it looks like on the 15-minute chart, right? 3 yellow lines, pink wedge. Pink ascending wedge formation, it's not a good sign. It's a pattern of exhaustion. After a downwards trend, it means we probably continue further downwards in a similar fashion to what a bear flag means and a bearish pennant formation. So this is where you see an ascending top line and an ascending bottom line leads to an ascending wedge. Not a good chart, not a good formation. And generally speaking, you know, when you see an ascending wedge, you do see the bearish divergence to kind of match it. And we have seen that there. We've got a bearish divergence in the RSI to match that ascending wedge. So I'm not expecting a break to the upside in the ultra short term here. I will be expecting a break to the downside. And I will ultimately be expecting Bitcoin to retest this yellow line for support that it tested just a while ago. So ultimately, I think Bitcoin's going to go down again into that lower 16K region and test that yellow line for support. Now, as for anything other than that, right, as for the other analysis, what can I say other than that? Not really much, because we don't have much data to go off based on this yellow line. I wish my chart would load here. Here we go. That's the downtrending yellow line. It's stemming from the 3rd of December through to the wick there on the 7th of December, and then obviously coming through to the wick we saw yesterday. If we do break this yellow line to the downside, this yellow support line, we will be, basically shooting straight downwards towards that 16.1k to 15.6k support zone, which we can check out here on the 4-hourly chart. That is basically our bottoming out zone for what we saw in the early to mid-November region. So we really want to be holding this yellow line for support. You know, if we want the bottom to be in for Bitcoin here, which I personally do, I do want the bottom to be in, obviously, we need to be holding that yellow line for support. Losing that yellow line will chuck us back down into this range and put us at very, very, very high risk of forming a lower low. Potentially a double bottom. We could see a double bottom, right? We could see something like that and then go back upwards, which wouldn't be too bad. And we do generally see double bottoms in bear markets, so it wouldn't be that abnormal. But that yellow line there, that downtrending yellow line and that wedge formation, very important right now. If we lose this yellow line, you can enter a short trade on Bitcoin with your stop loss above it, and you'll take profits at 16.1k and potentially even 15.6k, which is the support zone stemming all the way back from 2020 as well. So that's kind of a short-term analysis there for Bitcoin. And now we can get into the longer-term analysis. I want to briefly interrupt this video to talk about the BitGet Exchange. The BitGet Exchange has 5 times lower fees than Binance, which is the biggest major exchange in the cryptocurrency market on futures. It also has 0 fees on every single spot pair, so you can trade spot for entirely free, no fees included. It runs events. Right now it's got a FIFA World Cup event sponsored by Messi, the football player. It's got copy trading, strategy trading. It's got exclusive rewards and discounts in the rewards center. It's got everything you need for a trader using exchange. This is the exchange I personally use as a trader for my everyday trading, and I highly recommend everyone does so at the Wolves of Crypto YouTube channel. Sign up using my referral link for exclusive rewards and discounts. That really helps out the channel, and I appreciate it. For my fans from the United States of America, you can sign up using this exchange with a VPN and use the exchange with a VPN and just sign up using my referral link like normal, and you'll be treated like a normal customer because this is also a non-KYC exchange. So make sure to sign up using my referral link in the pinned comment or the description below, and without further ado, let's get back into the video. Okay, so I mentioned before this kind of horizontal support level that we generally form during bull markets on Bitcoin, right? I want to go ahead and point out where those were, right? There was one here at 28.6K. All right, let's go ahead and chuck it in. That's 28.9, roughly 28.6, right? So we can go ahead and fix it up now, but ultimately it doesn't really matter. You get the point. Okay, so 28.6K, 28.8K, same thing. Essentially, this is a line that we held throughout the entire bull market. We got above it, and from day one, we were retesting it, retested again, and before we even lost it, we found support on there. That is 3 separate long retests lasting like months on each occasion, right? So essentially, very, very, very strong support line. We finally lost it, and now we're in a range. And notice that ever since we lost that line, we've been downtrending very sharply. Obviously, we were downtrending before we lost it, but we did find support before the downtrend continued, which does validate the fact that the line was still there for support, and it still will be there for resistance as well, which is very important, but we'll get into that in a second. We had a very similar situation in 2018, and that support line in 2018 was in that roughly basically 6K region, right? Maybe a little bit below 6K. Doesn't really matter where exactly it is. The point is 5.7K, 6K, somewhere around there. That line is very important for 2018, right? And if we were to go all the way back down there, it'd probably act as support as well, but I don't think we're going that low. The point is that in a similar fashion to what we did in 2021 was a support line that we held throughout the entire bull market for 2017 and a lot of the bear market for 2018 before seeing a final capitulation. When we lost that line, we saw the final dump and we saw the bottom below. You'll notice that even in the time past that line being relevant, we still held for resistance here, and it's still held for resistance during COVID. That line has been relevant for a long time. This is just building the significance of the importance of these lines, right? Go back to 2013, same situation. We had a horizontal support line roughly around there, 390 USD, okay? That held for support, right? And when we finally lost it, we dumped. We dumped downwards, viciously dumped downwards, right? And we saw the low after losing that line. And then obviously when it came to the time where we needed to get back above it, it acted as resistance and it acted as support. So these lines here, these major horizontal bull market support lines is what I'm going to call them. They hold their relevance even past the time in which they are built, which is the bull market. Even in the preceding times, even during, the bear markets in the future and the following bull markets, they still hold their importance as resistance and support zones. They're very, very major lines. So what we can do, right, is we can go ahead and take some measurements now. And before we even do that, let me just clarify something. Once Bitcoin gets back above that 20.8K, right, that line there, just like it has done in previous bull markets, right, or previous cycles, it will start to pump. You'll notice here, look at 2013, for example. We dropped below the line. We had a bear market below that line. Long period of time of consolidation below the line. It took a long time to get back above it. When we finally got back above it, we started to slope upwards. We started to skyrocket. Exactly the same thing in 2018. We saw a long period of consolidation below the line. When we finally got back above the line, we started to slope to the upside, and we can expect the exact same thing here in the future in 2023 and 2024. When we finally get it back above this line, and it will happen eventually, when we do that, we will start to slope upwards and start to form that next bull market structure. Again, according to the 4-year cycle theory, the next bull market's going to be 2024, 2025, right after the halving, so late 2024 throughout the entirety of 2025. And realistically, this line here should line up with that a little bit. Obviously, the bull market doesn't trigger as soon as the line is broken because you do have macro uptrends even in bear markets. But the point is that should line up relatively nicely. Let me get into this analysis here because I'm sidetracking a little bit. What we need to measure now is basically how long it will take to get back above this line? How long is it going to take us here on Bitcoin, based on historical data, to get back above 20.8K? All right, 28.8K. What we can do is we can go ahead and measure from the breakdown point in 2013 to the time in which we got back above the line. How long did it take? It took 427 days, roughly, right? So just 400 days, right? Doesn't have to be exact, right? 2018, how long did it take? It actually took a lot quicker in 2018. It took 200 days. So going in the middle there, right? So we can go in the middle, or we can take two extremes. We can go ahead and say, okay, what if it takes 200 days like 2018? If it did that, we'd be getting it back above the line in like 2 weeks, which is not going to happen, right? So what if it goes in the middle between 400 and 200? That's obviously 300. So what if it's 300 days? If it's 300 days, we could be getting back above that line as soon as March 2023. And if it's 400 days, just like 2014, we could be getting back above that line in July 2023, in the middle of 2023, which actually makes perfect sense. Now, obviously, this is rough analysis. We don't have enough data. We only have 2 data points here, so we can't actually make a trend. But it's just speculation. It's giving you an idea of when we could be getting back above that line. I think July 2023 makes perfect sense, because what you'll notice is that if you look at the FOMC interest rate charts, right, the rate hike charts, rates are actually expected to start declining at this point in time due to the market's expectations in July 2023. And Bitcoin, obviously, bottoms out and tops out quicker than traditional markets. We saw Bitcoin top out in November. Traditional markets topped out in January. By the time traditional markets topped out, Bitcoin was already down 40%. So if the markets find their bottom in July 2023, which is what the rate hike chart will kind of expect, right, we could be seeing the S&P 500 bottom out in July, and at the same time, Bitcoin could be up significantly, just like it was down significantly by the time it topped out. Bitcoin could be above that 28.8K level in July 2023 when traditional markets bottom out. So it's interesting to look at. Obviously, it's highly speculative, but I did want to just point out the importance of this line for someone who is very, very conservative as well. And this is something I'll add. Someone who's a very conservative trader. They don't like risking their money. They're not into taking big risks in the market. What you'd actually want to be doing, in my personal opinion, is waiting for a breakout above that horizontal line before you even enter Bitcoin. If you hate risk, you're completely risk averse, you don't like risk at all, and you just want to be at profit 24/7 essentially, right? But you also understand that in being risk averse to that extent, you're missing out on the higher potential profit levels. You don't care about that. Low risk, low reward. You'd be waiting for a break above 20.8K, because historically speaking, minus COVID, because the COVID drop was obviously a black swan event that was basically unpredictable and was done within a couple of weeks. Minus COVID, when we get back above these horizontal lines, we never go back below them. Okay, so I will say that again. If you're extremely conservative, wait for a break above that line. Yes, you might be waiting 6 months. Yes, you might be waiting more than 6 months. But the point is, when we finally do get back above that line, there is no doubt in my mind that we will be trending upwards slowly from that point until the next bull market peak. So that's very important to note as well. Now, the other thing I wanted to look at, the other macro chart I wanted to look at here, and again, shout out to Mega Well Crypto, he speaks about this quite a lot on his channel, right, is the 2-day Gaussian, what is it called? 2-day Gaussian channel, right? On the 2-day chart, I should say. The 2-day chart Gaussian channel is probably the appropriate way to mention what this is. And the Gaussian channel is essentially this green and red indicator here. It's kind of like a moving average, and it's got 3 moving averages. It's got the center line, it's got the 2 sublines. And essentially what you see, generally speaking, on the 2-day chart is that every time this flips red, we enter a sustained downwards trend, and we retest the center line and the bottom lines quite a lot during that downwards trend to confirm that these are bull traps, etc. Right? So this is generally what you use it for, right? If the line is red, if the Gaussian channel is red, that means you're in a downwards trend, obviously, right? And what you'll see during that downwards trend is you can identify whether it's a bull trap or whether it's an actual trend reversal via whether it breaks the center line of the Gaussian channel or not. What you'll see in 2018 is a perfect example. The Gaussian channel flipped red. We saw many bull traps, all of which were easily identifiable as bull traps because we failed to get a sustained break above the center line of the Gaussian channel, and it did not flip green. So you were able to label all of these bull traps, and you were able to be confident in the fact that the downwards trend was sustaining still, right? That's a very good example of it. Right now, the same thing is happening. What we're seeing is the Gaussian channel has been red for almost a year at this point, since January 2022, and every single pump we have seen has failed to make significant progress. Either it's rejected from the bottom line, either it's rejected from the center line. I'm circling heaps of occasions here, they've all been bull traps, or it's broken just above the center line, but the Gaussian channel was unable to turn green, which means the upwards trend was not sustained. As of right now, we just saw another rejection from the Gaussian channel, right? So this is a good indicator for those of you who are a little bit more tolerant of risk, but also still want to get a relatively low risk position in relation to reward. Wait for the Gaussian channel to flip green. Once that thing flips green, it's very unlikely that we'll go downwards, right? Because just looking historically, aside from COVID, which stuffed everything up, obviously, like it always does, aside from COVID, every time this thing flips red or green, it stays red or green for a significant period of time, which means the chart has given a decent amount of time to move to the upside or move to the downside, which means this thing is very accurate at predicting swings in trends. When this thing flips green again, the Gaussian channel on the 2-day chart, when it flips green again, right, which means the price would have to break above the center line for a period of time, when it does that, it's very unlikely that it's a fake out. It's very much likely that that's confirmation that the bottom is in and the upwards trend will continue, and then we can come up and retest this 20.8k level like we talked about on the previous chart. So the Gaussian channel on the 2-day chart is also very much worth looking at a lot. Yeah, so I hope you learned something from this video, guys. I'll get back to you tomorrow. Hopefully there's some more short-term analysis to do. I'm interested to see how that short-term chart will progress. Doesn't look particularly good right now, but at this point in time, there's not really much to talk about in that regard. So thank you for watching. Hope you enjoyed. Like, subscribe, comment, and I'll catch you in the next one. Cheers.